Energy stocks are skyrocketing while some investors are bracing for end of financial year volatility before we likely see a July rally. And that is, of course, if history repeats itself. July is typically the strongest month of the year for investment returns. It's great to have your company on this 20th day of June. My name is Jessica Ramir, market strategist here with Moomoo. But first, let's touch on overnight markets and what you need to know. Well, we saw European stocks close lower for the third straight day. The benchmark there, the Euro Stoxx 600, fell into the red. Most sectors actually falling into negative territory. Gold, meanwhile, held pretty firm. It's just 1.6% under its record all-time high. And this is basically because we now have US President Donald Trump saying that he may support Israeli military action against Iran, but he won't decide if that will be the case for 2 weeks. Do keep in mind, though, US markets were closed for a public holiday, but the futures have opened lower, suggesting the S&P 500 will nudge down about 0.8%. This basically sets a pretty cautious tone across the Asia Pacific and indeed for Australia today. But today, the Aussie share market is expected to open flat. That's just going by the futures earlier. But if the market closes basically as is, we should be closing lower for the first time in about 6 weeks. I remember that the market has run up for 5 weeks outside of this week. And the reason that this week's pressure has come, it's at the hands of Middle East tension bringing up. Now, this brings us to the 3 key themes that investors are focused on right now, and that should be worthy of your investing attention as well. Firstly, energy. It's a critical sector that you need to be focused on, specifically oil and uranium stocks. They're charging. Let's bring that into the equation. Oil stocks are surging. The oil prices jumped 3% overnight before settling about higher by the tune of about 0.8%. It's holding at about $75.80 US a barrel. That's its highest level since January. And remember that we have got oil prices up 21% in a month. That's a pretty strong signal, suggesting that oil producers' profits will probably lift. And this is why we're seeing oil stocks rise the most this week. Stocks like Santos are up about 11.2%, but don't forget, Santos is trading higher because they have a takeover offer. We also have Beach Energy rising, but uranium is stealing the show. We can see that Deep Yellow is up 31% in 4 trading days. Boss Energy up 26, Paladin up 18. And the reason for this is a couple of things. Firstly, we've got the world's largest uranium ETF, Global X URA. That's set to post its 11th consecutive week of gains. And that's basically because uranium has hit its highest level since December. We do have uranium prices surging for a couple of factors. Firstly, we've got the world's largest uranium fund basically saying that they're going to spend $200 million on uranium. And this basically follows the US pushing ahead to fast track the construction or build out of new nuclear reactors in the US, really to increase nuclear power fourfold by 2050. And all of this, remember, is at a time when we've been speaking about uranium demand already surging. It's outstripping supply. And remember, the world's biggest companies, they're increasingly turning to nuclear power to keep the lights on 24/7. So think Microsoft, Meta, Amazon, they're buying uranium directly from companies like Constellation Energy. The second thing that I really want you to focus on that is going to draw close investor attention is the expected share market volatility with tax time. Now, there's just 6 trading days until the financial year ends. Tax minimization, it's going to be top of many people's minds. So this basically means you should expect volatility in the best and worst performing stocks across this financial year. Why? Well, investment managers will typically look to rebalance portfolios around this time of year to bring portfolios back into alignment. This basically means that you could see profit taking in some top performing stocks. So who are those? Well, they're gold stocks. So if we can think about the best performing stock this financial year, it's on the screen now. Regis Resources. Regis Resources shares are up 163% so far this financial year. Another stock to keep your eye on that is seeing profit taking, is expected to see profit taking, is Genesis. Genesis is up 155%. Here's a look at the best and worst performers financial year to date. We can see many gold stocks are in the best performing positions, so you would be expecting some tax loss selling there. Healthcare names such as Sigma Healthcare, they're up 158%. Pro Medicus, as we can see, it's up 102%. And tech stocks such as Technology One, Life 360, and Zip, they're all up between 89 and 123% in the past year. All I'm saying is just beware that we could see some volatility, as in selling in some of these names. Inversely, some of the stocks that are the worst performers could appear perhaps as low-hanging fruit and attractive to some. So keep an eye on potential further selling, though, in some of these worst performers that we've displayed on the screen. I do think, just going back to the point about low-hanging fruit, Whitehaven Coal could see a pickup in buying activity. This is one of the worst performing stocks across the financial year. Their shares are down 28%, but they're a huge payer of dividends on the ASX. And I think that you should keep this on your radar because the coal price has actually experienced a pretty high jump. In fact, coal prices have now surged to their highest levels since January. And Whitehaven Coal, their shares, as we're seeing on the screen, they've markedly moved up from their lows. In fact, they've just broken out from a technical perspective. For those technical traders out there, they should note that Whitehaven is above its 120 simple moving averages. This basically, ladies and gents, is a pretty bullish signal. So keep your eyes on high levels for low-hanging fruit, such as these stocks. The third thing that we want you to consider is that investors should be expecting strong performance in the stock market across July. Now, July is typically a strong month. In fact, historically, the best return for investment managers, and that's because investors are resetting their positions for the new financial year. Over the past 10 and 15 years, the ASX 200 has averaged a gain of 2.9%. So you should consider that some investors may typically look to buy into the stock market now, look at those favoured stocks, and then look to capitalize on seasonal strength ahead of a expected pickup in performance in July. And that's the daily for stocks and ETFs mentioned today. Head over to Moomoos platform where you'll find all the information that you need to consider. And stay tuned to our special weekly report. We'll dive into everything that you need to know about Virgin before they list on the ASX